I'm going to take a look at a longer accumulation trade, right? And this starts with, let's take a look at a opposite where this is going to be more critical, where we have a situation where we have a red moon on the daily. We don't have a red trend, right? And this is kind of what you're looking for. The red moon, eventually, when it gets to the bottom here, you'll see a red trend come in, and it'll pull the rest down. It's kind of like a snowball effect, right? So which means that in this area here, during this section here before the daily reaches its bottom, there's some opportunity for bounces and retest. So this is where we take a look at the 4 hour opportunities, and as always, there's always um, two moves in everything. So here's the first 4 hour move, right? You can see this heavy pullback on the 4 hour moon, 4 hour trend, big pullback, and that's what we're looking at right now. Now what we're looking for is anytime you see a big move, there is 99% of the time a move up and then a retest, and then it's continues down. So what we're playing here is a 4 hour accumulation move, and what we want to do here is catch the bounce here. So this retest up to the 200 moving average in that area, and the first thing we do here is to see if this move is something we want to look at. Is we take a look at the 200 moving average from the bottom support zone here, and we can see that that's about a 4% move, right? So what we're looking for are 1% moves, right? 1 to 2% moves, and we want to have a range that we're hitting the 50% area. What that basically means is if we want 2% or 1%, we want to have twice as much. If I want a 1% move, I want at least a minimum of a 2%, and I want an average of 4% because I really want to aim for 25% of the target, meaning that if there's a 4% opportunity, I want 25% of that as my target, which is the 1.5% move area. Right here, you can see that on the 4 hour, we can see that back to the 200 moving average is right above 4.33%, right? Meaning that if I'm looking for a 1% from this area here, all right, we'll do a 2% area. It's right about here in this area here. And then the 1% area, which is where I want to make money, is in this area here. So I'm going to just put a yellow line here, and we'll make it pretty thick, just so that we can understand that from these bottom areas where I have targets here, right? And these are 1% areas, and these are my two target zones. And the bottom area that we're looking for is any of these support areas, right? So this is kind of like gives you an idea of your 3 steps, right? So what basically this means here is we're set up to where we want to operate in these areas, and we want to get into these bottom zones. This is the best zone to buy. If we end up buying in that second zone here, we want to target that move, but we want 1% moves here, right? And what that allows us to have is opportunities to accumulate, and a target that's 4%, which is our 200 moving average, which is up here. That gives us our highest target area, right? So what that means is, we can work inside these lower zones here where it's more logical, and law of averages means that we're going to have more of these targets hit down in these areas here. And then if we get up to our 786, you can see here on the Fibonacci, which happens to also be the 200 moving average, then we can take advantage of a 4% move, right? But we want to focus in down here. So first things first, once the 4-hour hits the bottom and starts to go sideways, see the moon, the 4-hour RSI hits the bottom, starts to go sideways, right? And eventually, once it hits the bottom, we can see the trend come into play, a big pullback, and that starts where we have the downward move, right? So now what we're looking for is that 4-hour to break up, and our entry zone, or our basically super safe zone, is when the 4-hour RSI, and this is kind of what we call what we're focusing on. This is when the 4-hour RSI, or any RSI of interest, gets above this line here, which is the 20 line, right? This little line down here. When it breaks that, then we're in a super good zone where we would expect it to, at least hit the 50 before there's any rejection, but more than likely it's going to run up to the 80%. So that's the kind of where, the safety net is, right? So that's our safety zone as it starts to head towards that 20. Now during that time is where we're operating in these lower levels here, this level, this level, this level, right? So let's slide down here and say, okay, so now that we have that set up, we want to operate on the 1 hours, right? Meaning that when there are 1-hour moves, we want to take a look at how the 1 hour is operating, right? So first things first, let's go back to this big dip here, and we can see that on that big dip, our 1-hour RSIs, and more importantly, the basics. So we have our 1-hour trend hit here, 1-hour moon, and that's what we kind of got into that long fall. There's no 1-hour long yet. Okay, there's no 1-hour long yet, right? Which is what we're looking for, right? We're looking for a 1-hour moon that has a 1-hour trend that allows us to see the jump and safety move that we want to see from this area, but allows us to get into these higher areas, and gives us our safer zone of reaching our 200 moving average, which is in this area about a 3% move. So during this, you have these lower levels, right? So this lower level here is the degen level, right? Right, and the degen level is simply the level that is the lowest of lows, looking for, getting the greediest entry. And this is the consolidation level here. And then you have the higher targets. So we want to be buying on these lower levels here, so about 58,500, and we want to be selling, when we get our 1% move. So if we're doing something like, minimum, or even like a basic 30x, 30x leverage, these are where we pick up 200, 250. So you should be operating with about $1,000, to kind of keep it simple, so you can learn, right? So if you have 5,000 bucks, you want to operate here with $1,000, so that way you can focus on $200 gains, right? So we can see here in the beginning of this, we had our 1-hour moon, our 1-hour trend. We got this amazing pullback, and then we can see after that big pullback, we were waiting for the go ahead of the 1-hour RSIs getting to the bottom, and eventually a green moon, which happened here. Now once this green moon hits, right, and we're at this low level of volume here, this is going to allow us to start tracking, the support areas and where we should look for, right? And what this does for us is that we can see that there's a lower level here, and then after the moon hit, the green moon hit, we can see that on that pullback before the green moon, there was a lower level here, right? Now we're looking for the third confirmation, which is after the green moon, because remember, every time there's a move, there is a double move, right? And what that means is there's a move, a pullback, and then the next move, right? There's always a double move, right? So this allows us to gather information. These are 3 points. So here's our first point, which is the big pullback to support, then the bounce, right? And same thing, bounce, pullback, right? And now that that second move after that bounce came in, we can see that these are our levels here. These are the area that we want to operate. Remember, we want to operate in this lower level here because this is where, you know, the support, resistance, and all that other stuff is going on. But it allows us to also know that where it came from is normally a target to go back to. So, you know, these are where we can evaluate areas that we can get into for profit, right? So now that we have these two areas, we can see that we have this point here, level 1, we have level 2 and level 3. And now what we want to do is look at, you can see these two levels here hit, right? Now this here is the super patient zone, this white line here, right? This is where when you become like so into understanding what you're looking for, this is the area that you want to get into. This is the degen zone. This from this level here down to here. This is that zone, right? Let me put a parallel channel. So the parallel channel that we're looking for is right there. So that's the degen zone, right? And it's just the lowest, it's the bottom of the first pull, the top, the bottom, the top is the bottom of the second, and then the third. So this sets up a beautiful, you know, area that you can say that normally in this area here, when you have a parallel channel, you want to take the 50% mark, which is sitting in this right there on this perforated line. That's normally where you would set, you know, entry points there. And we can see that the entry points there are coming in at about 58,269, right? So that's the entry point on the middle, and then you have your super degen zone, which is 57,000, you know, 900, so 58,000 right there. So that's kind of where these are your two targets for buys, right? So if you get into an entry where you bought here, your next entry would be that lower line there. So those are the two entry points. You'd be searching for that middle, and then you'd be looking for that lower line. So those are the two entries that you really want to get into. And that's kind of where your patience and what you're understanding. Now, the reason why we're shooting for these really low lines at this time is simply because at the current time, there's not enough volume to push the other direction. It's doing what is called accumulation, meaning that it's going to start accumulating in these lower levels and then build up a floor, a support zone, and then eventually it will find what we call the consolidation zone, which is this middle area here. And then once it has that move to the upper side, you know, above this white line here, that's kind of like the FOMO zone, right? That's where a lot of guys will, you know, get in and buy at the wrong time. And that, you know, that creates this middle area here, which would be the, you know, one of our targets, right? So this is where, you know, as you start to, you know, get in here, you start to look at these zones here, and these are where you set your entries, right? Because remember, you don't have a 1 hour green trend, right? And if your alert is set on your 1 hour green trend, it hasn't gone off yet. So you don't have a real long trade right now. What you're doing is you're in your accumulation trade, right? Which means your job is to find, right? Find, after this has found a lower, your job is to find points of entry that give you solid trades multiple times throughout the process. Now what this actually is this area here. This is the consolidation zone. And what we want to do inside the consolidation zone is we want to find a consolidation zone that gives us, a 1% move, right? You can see each of these moves here were above a 1% move. These are actually 2% moves, right? What that means is if you were, let's say you had $1,000 in here, and you saw this first pull down here, and after this pull down, you took an entry point. Uh, so here's your first green moon, right? So you see how this green moon comes in here? It kind of slows things down, and then the red moon, and then the next green moon is right here, right? And you say, okay, I'm gonna take this 1 hour RSI in this green moon, and I'm gonna take an entry here, and what I'm looking for is just a small move on the moon, right? And you're looking for a 1% move. It makes its 1% move, and now this area here has created your target zones, right? And you can see on this consolidation area, you can see here that after this original pull down here that made this zone here, there was a bounce, right? And that bounce is right here. See that bounce right there? So that bounce right there, along with the 4 hour RSI being bottom, etc., this bounce right here let us know that once it had that bounce, right? You can see that bounce right there. Once you've seen this bounce and it pulled back down to this lower level here, right? This, with that new green moon, is a trade that we would be taking somewhere in this area here, which would allow us to get to this section here, right? So this would be an entry after this bounce, and then an entry point. This is accumulation zone, right? And then what we're doing is we're just going to accumulate to a 1% move. Now the safest, bounce is normally you have your first bounce here, right? And then comes back and finds support, and then people, this trade right here is a typical trade where people think that the area here is support, this is the bounce, this is the retest, and then that's where this trade happens here. So this entire trade that we're looking at right here is basically a normal trade that most people make. So that's what you have to kind of get to the point where you start realizing what most people are doing, so that you can kind of go along with their game plans and see what they're doing out there. So that way So that's what that first trade is, right? So that was that accumulation trade at that bottom, and that took that first bounce. Now this is where the people who didn't sell on this big, this big drop are selling on this bounce because they feel like, they don't want to take the extra loss, which is a retest of this lower area, right? And that's why this trade happens, right? So that's why once you see these trades happen, you can start focusing on those lower support areas or the degen zone down here, because it's always going to come back and touch that before it starts working its way back up. Now, that's what creates this consolidation zone that we're sitting in here. That's this zone right here where we have a consolidation zone here, and this is where we're operating, in this zone here, right? So inside this blue zone, we're operating here, and all we want to know is from the top to the bottom of that zone, how much percentage is it? If it's a 4% move, that's perfect, because we only want 25% of that, which is 1%. If it's 3%, it's not bad, because we only need 33% of that, which is 1%, right? 3/3. But if it's 2%, it's not the greatest in the world, because now our odds are getting worse, because we need 50% of that, right? Now, is that possible to get? Yes, all the time. But you want to increase your odds of making money by, going for the 25% needed zones versus 50% needed zones, or something to retouch where it currently came from level. So that's the secret to really like eliminating risk and collecting rewards. So once we have this area mapped out, as you can see here with our yellow, the super zone, right? But even from the super zone, we can see if we were getting in on this level here, we can see that we have a 1% move to the first yellow, 2% 2% move to the second yellow, and then these are our target areas here, right? So we're not looking for home runs here. What we're looking for are, base hits, right? I'll move this up a little bit more, right about there. It's about 1%. Okay, so these areas here are our targets, right? Meaning that if we enter anywhere on these yellow lines here, and if you look to your left of the blue zone, that first arrow is your entry, the second arrow is your 1% gain, and the third green arrow over here at the end of the blue zone is going to be your top target, right? So that's kind of where that's set. What that means is we want to always aim for that first target. So if we're getting entries on this lower, the lowest yellow zone, we have entries to this first zone here, which is 1%, allows us to make, if you have $1,000 and you're only doing a 30% leverage, right? A 1% move would be $300, so $250 every single time that we can get into this trade. And then sometimes you end up in a good situation, like we can see over here. We were able to set our entries into that top level area, right? Now I'll put an arrow over there. Top level area at about 58,400 area, and it gives us the area to make the 1% move. But as you can see on that first entry, if we would have took it, we were able to actually get to 2% on that move, right? And give us twice as much as what we need. So that would be the first accumulation, meaning that once we've seen that first move, we can see that it tapped out, and once again it's tapping out in that area right here. I'll turn that yellow, that little zone there. And what that's doing for us is that's giving us our first accumulation buy, right? So let's say you have 1,000 in here, and you pick it up inside that blue zone, and you get it at this first 5,804 zone, and then you see a push to the top side, and we get this nice little target zone here with the yellow target, and we got our 1%, and we even got our 2%. But let's just keep it simple and just forget trying to go for the big dogs. Let's just say that's the 1% move, right? So right there we have $1,000 in there. That first move gives us a 1% move. So we walk away with $300, right? So that's one third of our entry that we put back into our savings, which means now our $1,000 trade is only a $700 trade at risk, right? Now the ideal is that once that trade happened, once again on these pullbacks that are happening on this side, it allows us to start slowly moving up our entry zones based on the pullback. So you can see that the next entry zone was a little bit higher, and if we go and take a look at the 1 hour here, we can see that the 1 hour RSI was pulling back, and then it had a little spurt there that gave us what we needed, and now we're actually in an area where the 1 hour is coming back down a little bit here, and we can see that it wants to bring its area down, So this would be a second chance for accumulation on the right side to start looking in the buy zones of what we want. Now it did have after we had this long spike here. All right, so there's that long spike that we would have made our percentages on. We did see a pullback there, a little bit of a dip that came down to about 58,600 area right there. Didn't quite hit our buy zones, all right, but it did have that pullback right there. And in that situation, we're looking to, capitalize on grabbing any of those, but it hasn't, really found a foundation for us. But now we can start to see that just in our consolidation zone, we can see that our lines are starting to um, come a little bit higher, right? So you can see on our three levels here that we have our first one, our second. There's the pullback to confirm the full support zone, and then as these little wicks go up, and there's our spike one. This is the one we made our money on. But after that one, we can see here that came all the way back down to there, and then the final one is here. So we can see where the lines are moving up. But what we're going to expect here is that eventually, after it makes its next move to the top side, it needs to pull back and it needs to level up somewhere here, which in turn, what that does is it brings our last lower level a little bit higher up to here, meaning that our entry prices would raise up into this area up in here, right? So 58,800, right? That's our next accumulation zone. Now what that allows us to do here is, like I said, the three yellow zones here, we still have this yellow zone here that's within this full zone that allows us to have a 1% move in here, which means in this entire area right here, I'll turn it blue. Once again, in this blue zone, if we're buying at this upper area, it still has a easy 1% move ratio to this next yellow line, which means we should be able to capitalize on another 300, 250 move, which would take our $1,000 trade down to a 50% risk, meaning that we've put in another 250 or 300 into our savings or pulled out of this trade, which means we're trading at 1,000, but in reality we have 500 already in gains. Now that's the beauty of that, because now we're working our way up into these zones here, and eventually one of these yellow zones that we're working on, one of these zones, once it levels out, will give us an area of support, and then we'll eventually get a 1 hour green trend. Right now, once the 1 hour green trend happens, we're back in the same scenario where we will eventually have an area where a green trend will pop up on this 1 hour, and then what we'll have is a pump to move again, meaning there will be a pump on the 1 hour trend, and that 1 hour trend will come back down, and more than likely would probably find support somewhere on one of these yellow lines that we were targeting in the first place. And then once that happens, we will then see the next move to the upside, right? And that's where we see the bigger moves, another opportunity to grab those percentages. And like I said, we're not concerned about these big moves to the upside, because all we want to do is find these lower levels to get into so that we can find these percentages, right? So like coming off of that other top, top yellow there, to get a 1% move from there, or even a kind of like an ideal of that, let's just do a 2%, right? Now I'll put a blue line across there. But all we need this to do at that point, and I'll turn it blue, to get to this next blue line, that's a 2% move right there to that next area right there, which means all we have to do is find any support over the next, day or so. As once this 1 hour is working into a trend, as it starts to work into a trend, eventually we will find support on one of our original 1% move, our yellow lines, one of those areas. And, if we're lucky, we even get in even lower, right? The lowest one, which be, down here. And that allows us, once we see that green trend, to know that this move to the upside would be equivalent to a 4% move, but worst case scenario, a 2% move. Because remember, we're only looking to get those 30% returns on there. So once that move happens there, we can then reevaluate where all the RSIs are, if the 2 hours at the top and it's starting to come down. So kind of like where it's at now. You see how the 2 hours reaching the top here? That means it's starting to get to its area of, we're going to see the most pushing, because once they get to the top, that's where they're kind of like the strongest, so we should see the most volume in there. But if these get to the top and then start to show weakness, we know that more than likely we're going to see that pull back to those first yellow areas, those lower level areas for us to get into. And what that's going to do, it means that we have another opportunity to grab those lower levels and get those pushes up, which means we can keep working the same consolidation area for 1% over and over and over and over and over, which allows us to, just collect, our 200, our 30% gains. It's really all we want, right? Because once you do 4 of them at 30% gains, you have, you've basically doubled your $1,000, and now you have house money. So that house money will continue that trade until that trade manifests into a push or a long like we want, or you end up getting where all the RSIs reach the top, and it's going to basically say there's not enough volume in the market, and it's going to continue to fall the other way again. And now at that point, you can go into the short positions and start working the opposite direction, because you've already, by being searching into the long, you've already recognized the peak of how much volume is in the particular trade that you're in, and you already see that volume, that you're already at that top. So if this, let's say that this Bitcoin trade here starts working itself over, and let's say that this line here that we get, isn't that tall. So let's say that we get a situation where the Bitcoin trade eventually has some type of a spike, but it only doesn't reach the 786 level, right? Let's say it only reaches the 5.5 level, right? Let's say it only gets to this area here. The beauty of that is the return on that level, meaning that if it goes from that level there, we already know that the target area for that is down here, that first yellow line, right? Which means we have a 3% move to the downside, right? But once again, what are we looking for? We're looking for 1% moves. The beautiful thing about having a down percent move, right? This is where people don't really understand why shorting is better than longing, is because shorting is easier to happen, right? So just let this sink in the head. It is harder to get people to buy a coin, right? Because then you have to, you're basically, your data is really just hopium, meaning that you're hoping that people who want Bitcoin are going to buy at this level, and you're hoping that they're around. The most beautiful thing about shorting is we already know that all the money's there, so we don't need to know how much volume is in the coin. The only thing that we're waiting on is human nature, and that is paper hands selling for their profits before they lose them, right? So you have more things that are going in your favor when you're shorting, right? Because you're looking for people to sell to get their profits, which is a normal thing, and you're looking for people to panic sell, which is a normal thing, and you're looking for people to, move out of their position so they don't lose money, right? All normal. On the other side, when you need a long, you need people to buy, you need people to be in the market, you need a lot of things to happen for the long to happen. This is why, I like playing the longs and taking profits and chipping away at the day. And then when shorts come, I'm more likely to let the short, in this scenario, right? We have a 3% move to the downside. I'm more likely to shoot for the 1%, but then shoot for that second level, right? So I'm more likely to go for the 2% move here and say, you know what, I'm going to go for that second yellow line and at that 2%. So that way I'm getting 60% on my trade, because the odds of it doing that is twice as high as going long. It's actually 75% better odds. So I hold on and go for my risk is to, when it gets to the 1%, is I'm more likely to, allow it the opportunity to go for the 2% move, because shorts have more odds of hitting the 2% move versus the 1, right? Because it's easier to go down than it is to go up. And that's just what that is. So far right now, this is just a consolidation move. The job is to get into these lower yellow areas, these lower yellow lines, and then once you get into these, your 3 green arrows, right? These are our 3 entry zones to your left here. These 3, the degen zone, right? That's really where you want to buy all the time when you have super patience. But these are the three areas of interest, right? You want to buy at that low yellow, sell at the middle yellow. You want to do that multiple times, and then once the value moves it to that second yellow, you want to sell at that next yellow, and you want to do that over and over until you get the consolidation that eventually becomes a 1 hour green trend, because now you know that you're actually into a long trade. And if you happen to be in a trade already, you can say, oh, I'm in the best entry point. Then you can take the risk of saying, I'm going to push, instead of the 1% move, I'm going to push for the 2 or 3% move, because I'm in the best entry position, because I've already, got myself into these lower levels, right? Which is a video that we'll get into when we have more. Um, we have a student on, and we can talk over and kind of like go through the mentality of it, right? But so far, we're looking for this to, push up another time, and it's just consolidation across the side of getting itself together. All right, so there'll be more videos like this. If you want to understand how to, take advantage of anything that you guys are seeing here on YouTube, the system that I use to get alerts, email alerts on when to make these trades and when to sell these trades, and how to use the system I use to accumulate and make the profits, always send me an email at vccryptonation at Gmail. And if in the U.S., you can text me at 331-454-2027. All right, guys, good luck. God bless.